Hello, this is CMC Markets Weekly Trading Outlook for the week of November the 16th, 2015. My name is Colin Szynski, Chief Market Strategist. My topic this week is I'm going to ask the question, have gold and oil hit rock bottom for now? I'm losing my voice a little bit here, so I am going to keep this fairly short this week relative to some of our other videos and spare everyone my voice. So let's just begin here with, we've seen quite a big sell-off here in gold over the last several weeks here. It's really plunged. It's dropped here from up above, up near 1180. It's lost pretty much $100, and it's come down here and it's been testing support in the low 1070s, where it does seem to be picking some up. If we look down here farther, we can see that gold is getting pretty oversold on the RSI, and it's almost as oversold as it was back in the summertime before it had its big rally. Just as it had become overbought by here back about a month ago, it's now gotten quite oversold, which suggests it's probably getting due for a bounce. Even back here where it got oversold, it had a bounce. So we're at a point where into a zone where it could start to attract some support near previous lows. It's getting oversold, getting due for a bounce. So far, it has stabilized in and around 1080. There's no reason that we couldn't see it bounce back up above 1090, 1100, and this resistance here is about 1110. So there is some room for a rebound in gold. What could drive the bounce back in gold? Well, when we think about what could take it back up is what took it down in the first place. What's taking gold down in the last few weeks was another big rally for the US dollar. The street had, a lot of people on the street had kind of discounted the prospects of a FOMC rate hike this year, but between the last Fed meeting and then the strong U.S. payrolls, we've seen a huge resurgence in speculation that, and signs from the Fed flatly, that December looks on for a payrolls increase, an interest rate increase, and that could could put a cap on U.S. dollar and on help to put a floor underneath gold. Why am I saying that? Because U.S. dollar's had a pretty good run up now, and I think it's priced in an initial U.S. rate hike. Because when we look at the Fed speakers, not only are they talking about raising rates once, but they're also talking very much about keeping the glide path afterwards gradual. They're not going to raise every meeting like they did in the previous cycle. We'll be lucky if we see them raise every other meeting. It could be even less than that. So based on that, we're probably at a point where the U.S. dollar is pretty much priced in an initial round of increases. It's up around 99. I think it could struggle severely with the 100 level. If there's limited upside for U.S. dollar, means that there's limited downside for gold, potential for a reversal in both. The other thing that will be interesting will be the ECB and how the euro dollar reacts. We've had the U.S. dollar, euro dollar also in a downswing, with people speculating that the ECB is going to come out and start increasing stimulus, and perhaps either cutting interest rates or increasing their QE. This is depressed, but again, now this is starting to level off, suggesting that the market has started to price in a significant new stimulus from the ECB. The one actually to keep an eye on this week is the yen. And the reason I say that is because there's another Bank of Japan meeting later in the week. Everybody thought that the Bank of Japan would come out with new stimulus about 3 weeks ago. They didn't. All the signs since have been suggesting that they think they're on track to reach their inflation goals eventually. There's no new fiscal stimulus coming, so. Dollar rallied against the yen as the Fed speculation reset itself, but since then it's starting to come back down. The reason it's starting to come back down is that people are now thinking that the Bank of Japan may also be a neutral central bank, whereas previously people had thought they'd be full on easing. They're going to probably continue their current QE program, but not really add to it. So in that case, that makes them more neutral than, say, the ECB, who's looking ready to go pedal to the metal. I'm just going to mention crude oil here briefly as well. The crude oil has been under a lot of pressure lately, and this could continue in the coming weeks, because what we see here with crude is we saw it peak at a lower high, and it's been rolling back down. And even here, even though the RSI is getting oversold, we're probably in a point where maybe you could get some support, maybe in this 40 to 42 area. But there's no reason to think this downtrend's over. We're in the beginning of what could be a long-term secular bear market for crude oil. If it busts 40, first support is around 37.45, this previous low here back in August, and around 35 is the long-term low set back in 2008. I think you're probably going to see crude go into some kind of a, whether it's a 35 to 60 or a 40 to 60 kind of trading range that could play out for the next several years. But right now, people are talking oversupply and glut in the oil market, that a lot of ships are being sent towards the U.S. is one area that actually has some growing demand, but a lot of oil at sea is suggesting a lot of supply sloshing around out there around the world. Once that starts to fade, we could get a rebound, but that might be a little while. It's hard to say. We're in a seasonally favorable period for oil, but so far that hasn't been helping. So I just wanted to take one other quick thing here. I just wanted to show the stock market. So I've been talking about crude and gold getting oversold. Gold looks ready for a bounce. Crude could go sideways. Stocks also are starting to look like some of the froth has come out of them. Let's look at the DAX here. We'll see we're into a sideways range. We've dipped below 10.650. Look at this. We found support right at the top of that gap and have bounced up off it. There's a Fibonacci cluster there around 10.850. But the most important thing I want to show is down here on the RSI. The DAX had gotten quite overbought up here, but it's been rolling down, and now it's getting back and getting closer to 50. As the RSI gets back closer to 50, the question is, does it hold it and maintain the uptrend, or does it break and signal a deeper downturn? So far, it looks like that one wants to hold. And if we go and look at some of the other markets here, let's look at the US 30. So US 30 has actually broken it, slipped a little bit below. Same with the S&P. Has broken 50 as well to signal a deeper downturn in the short term. However, even that's still a trend of higher lows for the S&P 500. So we could still see some weakness and some choppiness in U.S. markets. In particular, in the U.S. markets this week, keep an eye on the retailing sector, and I'll just put up this Macy's chart and show why. Here's a big gap down last week. Macy's missed on earnings. Macy's guided down on Q4 sales. We're heading into the busiest shopping time of the year for the United States with Black Friday and Cyber Monday and the holidays. And what's happening, everybody's cutting their sales forecasts. So stocks in the retail sector are still getting repriced downward. Walmart has previously cut its guidance. Nordstrom cut its guidance. And this week we're heading into a whole nother pile of U.S. retailer earnings. So, just some of the key ones to note. On Tuesday, Home Depot and Walmart. Wednesday, Target, Lowe's, Staples, L Brands. Thursday, Best Buy and Gap. And Friday, Abercrombie. So right across the board, we're getting all kinds of retailers reporting this week. In Canada, we get the grocery stores reporting, Loblaw and Metro on Wednesday. So it is a big week for retailer earnings. Watch the guidance. That's going to be most significant going forward. Some companies are guiding to negative same-store guidance, so we could see that as well. So the retailers aren't thinking this year may not be as good a holiday season as last year. Consumer spending appears to be restrained. Let's see how that plays out, and if because of that we could get a big washout in retail stocks this week, and that's something that could hold back the U.S. indices. As you can see, I'm losing my voice a bit here still, so I'm going to wrap it up at this point, but we'll just also highlight very briefly a couple of quick things here. There are a number of announcements. It's mostly Asia-Pacific. There's a number of things from New Zealand. Japan, I noted, has their Bank of Japan meeting, also GDP. U.S., it's middle-tier reports, things like Empire Manufacturing. I don't think Fed minutes will be a big deal. I think most people are pretty clear on which way they're heading this time out. And that wraps it up here for me. So I wish everyone a great week for trading.